Welcome to the Pacesetter Pod, where we explore and reveal the perspectives, insights, and approaches to deliver great results and growth in your agribusiness through better execution. Here's your host, the Integration Pacesetter, Joe Mosier.
Welcome, Pacesetters of Agribusiness, to another episode of the Pacesetter Pod, where we amplify voices from across the agribusiness industry, aggregate perspectives, and elevate our collective thinking around strategy execution. I'm your host, Joe Mosier. A quick reminder to like and subscribe to the show wherever you get your podcasts so you never miss an episode. And if you're so inclined, at the end of today's discussion, we would love it if you consider leaving us a review and letting us know how we're doing. Today, I'm going to be sitting down with Aman, an Agtech executive with deep agronomic and technology experience at two of the nation's largest ag retailers, CHS and Nutrient Ag Solutions. Aman is currently an advisor to ag tech companies addressing in-the-field opportunities, including companies like Green Eye Technology, where Aman is supporting strategic partnerships and IP strategy. Now, the ag tech is doomed and uninvestable sentiment is really interesting to me, considering that it follows in the wake of a decade of very wild exuberance, that ag technology or ag tech would solve all the biological problems that we encounter in the field, would address many of the environmental concerns associated with crop protection products and synthetic chemistry, that all the information asymmetries at the farm gate and for market participants would dissolve, and that there'd be a full or a significant, if not full, disintermediation of the complex service, product, and production supply chains that our industry runs on. Now, in the wake of billions of dollars of losses in invested capital that have flowed from a failure to realize many of those bold ambitions, a lot of ink has been spilled on why these efforts failed. And there's been plenty of people dancing on the graves of those who tried, of those who took those big swings and ultimately didn't succeed in the way they initially envisioned. And I'll admit that understanding why the last decade, last 10 to 15 years didn't materialize the way many hoped is interesting and important. But it's also interesting and important to talk with people who are still devoutly bullish in the face of that counter sentiment. Folks who see promise and the seeds of progress amid the clouds of risk, where others see a lot of opportunity or likelihood of value and capital destruction. And so I wanted to sit down with Aman. And in our conversation today, you're going to hear Aman offer a bull case on ag tech, which we don't hear very much of these days. We're going to hear how he sees the next 15 years comparing to the last 15 years, and how to create a successful agribusiness and an ag tech offering around an understanding of grower belief systems. And then finally, we're also going to get into the role of AI and distribution in how ag tech will be transforming our industry in the years ahead. Wonderful conversation. I think you'll find a lot of value and insights in it. Thank you for joining us in the Pacesetter Pod today. And here's my conversation with Aman, Anand. Aman, welcome to the Pacesetter Pod.
Thanks for having me.
This is a conversation I've been looking forward to, and we've talked about ag tech a number of times in the show over the past couple of years, sometimes kind of grazing against the topic, sometimes digging right in. But based on your background, the work that you do, I think this is it'll be really good to dig right into the topic. Aman, over the last decade or so, we've seen the virtual evaporation of, you could say billions of dollars of investment capital across ag tech. And there's success stories for sure, but there's also this almost like a mass grave of cautionary tales and things that we hopefully have learned along the way. At the same time, I've heard you repeatedly say that ag tech pessimism is misplaced. Yep. What is there to be optimistic about when it comes to ag tech?
So here I like to give you kind of background, what exactly happened in last 14, 15 years in ag tech space. So to answer your question, why people are thinking the ag tech negativity and why I strongly believe that ag tech negativity is misplaced, because, to explain that, I have to go back, right? So I think to understand why people feel so negative about ag tech today, we have to go back to the moments when the dynamics really changed. And for me, that inflection point was when Monsanto acquired Climate Fieldview. And that Climate Fieldview acquisition did two things at once. The first, it's validated that Agtech as a legitimate, investable vertical at global scale. And the second, what happened is it opened the floodgate of revenue, floodgate of fundings from venture world. Venture money started flowing into agriculture at a level we had never seen before. And the whole assumption was that Agtech would follow the same growth curve as software, fintech, or at times I say even like pharma. But the reality is, over the next, after that acquisition happened, for next 5, 7 years, we see kind of overflow of funding. And in last 1 decade, we had roughly $45 billion of investment into agtech. And a lot of important learning came out of that period. But still, we think that, okay, we lost a lot of money. So we lost, in last 18 months, we lost close to $18 billion. But we have to realize that, but we also learned something uncomfortable during that time period. And that's the reason about any negativity that you see in agriculture. So the basic learning we had is agriculture does not reward novelty the way other industry do. And I will explain why. So when people say, $30 billion evaporated, I actually see it very differently. All these investment is still there, right? It funded the overall discovery phase in agriculture technology. And now we are entering, which is very exciting phase now. So now we are entering what I would call the installation phase. And that installation phase is going to be very interesting because if you get negative, then I don't think it's a right way to say negative. What we are seeing now is a shift from big promise to building something that is working and building something which is installed, operated, and justify economically at the field level. And I feel very optimistic about it because this shift is very healthy. So if you look at where AgTech is headed, definitely I see few clear signal that we realize and we learn that. The first learning I say is the return on investment is now non-negotiable. Means farmers and retailers are no longer buying interesting technology. So they're not buying a toy or something like that. They're buying outcome. And this outcome is very important. So having a clear ROI is non-negotiable. Second, what I'm seeing is the transparency in the value chain is becoming very essential. Because a lot of people say that in the agri-food value chain, a lot of the revenue and the profit stay with the downstream player. So the moment we started talking about that, we recognize that transparency in the value proposition is very essential. The industry has moved past those black box model, right? And farmers want to know exactly how value is created. And we have to explain farmers that where saving is building from and how we are going to accomplish this. So those things are changing very fast. And eventually what will happen and why I'm optimistic is overall farm profitability will improve. And few others things are happening in this space that, the narrative around ESG space. And when we are talking about a new technology has to have real value. But at the same time, we had very tight margin. And when we say that, oh, farmers are not, accepting this new model, I think farmers adopt faster than ever when they see the real value. For example, if you look at any new technology that solve the labor shortage problem and, things where farmers are worried by input costs and operational pressure. And if any active technology is solving that problem, definitely it will force that acceleration in the adoption. So these are the fundamental changes I'm seeing in AgTech space. And I hope after this installation phase, it is going to change significantly and a lot of new technology, which has very clear ROI, is going to get adopted.
Yeah, that's interesting. This idea of the ROI being non-negotiable and that you're buying demonstrated, credible, repeatable outcomes. That will, of course, that kind of rigor is going to lead to better investments, better technologies, better products hitting the market. Let's go way back, though. Something you said that was that's been sort of sitting in my brain here as you said it was that one of the main two things that happened as a result of Monsanto's acquisition of Climate Field View is that it validated the ag tech segment as an investable category. And I wonder if it really did validate it. I think it somehow provided a point of justification for others to put capital into it, because the mere fact that a big check was written unto itself doesn't validate that the value will eventually accrue to that investor. And so, I'm not, we could debate whether or not that was a good acquisition at that cost. But I also wonder if there's not something there around just human nature and investor mentality, that we simply used the fact that someone made a big capital infusion and acquired a company as a green light for others to do the same. Was that reckless, or do you think there actually was something different about that acquisition where it was, in hindsight, justified for what happened over the next 15 years?
I would say it was not reckless, because a lot of Agtech, I agree, that a lot of Agtech borrowed the fintech playbook, right? And the initial intent was like, okay, if we can aggregate massive data fast, build a dashboard, and a time where each and every company has farm management information system and still have. So the idea to build dashboard just to monetize insight. In agriculture, monetizing insights are not as easy as we think, right? But the agriculture is not transactional. The reason is agriculture is not transactional. It's biological and local. So what happened here is the data without agronomic context, it failed to create value. And what happened? It created more noise. So in fintech, if you have like more data, often create a kind of insight, and you can act on those insights very quickly. In agriculture, that's not the case. So in agriculture, more data without execution and context can reduce confidence, right? And that's the reason the farmer still has to make the decision and still has the risk, because merely acting on those insights was, at that time, was not possible. So all those FMIS software we had, or any Agtech tool out there, failed because it failed to increase the confidence of farmers. And I think that's the reason. Yeah.
So the fintech playbook, as you said, I mean, that approach of rapid data aggregation. Let's compile this data. Let's create those dashboards, insights, visualizations, modeling on top of it. Let's enable that rapid decision-making iteration, runs headlong into the biological constraints of the farmer may have all that data, or they're going to have all their own data. But by the time they make a planting decision, it's several months later. By the time they consider the soil conditions, that variables have changed. The weather outlook is different. The global markets and the demand signals are getting for their production are different. And so the timing delays also run into, even if you had a well-articulated, crafted, and delivered data aggregate solution, there's still the timing and biological constraints around the business.
100%. 100%. So if you look at agriculture, you have millions of fields, you have separate soil type. So in science, they're saying that your soil type is changing every 15 meter or 50 feet. So millions of fields, you have all kind of soil, climatic condition, management style. And then one core reality that everyone has to understand, in agriculture, you deal with biology, you deal with weather, and you deal with all those economic interactions in real time. And in agriculture, if you look at our overall decision-making process is highly distributed. And when it's highly distributed, at the same time, you're working with very thin margin and high variability. So basically, in fintech, you have the financial risk, right? But in farming or farmers, they hold both biological and financial risk. So then it's very difficult. And then if I look at as an agronomist, as a trained agronomist, how I see like in pharmaceuticals, in pharma industry, if you're bringing any new innovation, you have to fulfill some of the regulatory requirement, and then you have to fully explain the value to a doctor. So there is only two factors. So either you're dealing with the regulator and the doctors. So only two explanations you have to give. But in agriculture, imagine you have to narrate your story in terms of biology, you have to explain the weather, you have to explain the market. And then on top of all those risk factors, farmers has to make those final pick. So farmers has to decide what they're going to do based on all those changing conditions. So basically, I always say the farming is highest level of risk enterprise. So I can't think of any other industry has as risk as farming. So definitely this is not the fintech model. This is not the pharma model. This is very unique. And in last 14, 15 years, we realized that this is not as simple as we think. So overall, I would just say that Agtech never failed. It was just misevaluated by the venture world, misevaluated by the private equity world. But overall, again, I'm going back to my opening remarks that I'm very optimistic. I'm extremely optimistic because we cleared a phase. We are entering into a new phase where there's no hype, there's only reality, and there's only integration, and things will happen that will eventually make farmers to make more money.
So for that integration to happen and for the farmers to eventually extract the value from that technology that you're talking about, we have to look to the customer, look to the farmer and their bias around purchasing decisions. Because the purchasing decision is actually the adoption as well, right? That's where they're effectively deploying it within their operation. And so you, as you said, you're an agronomist, your background's in agronomy and soil health. You've sat in front of many customers in your career. The average farmer gets roughly 40 paychecks a career.
That's
and
right,
so
yeah.
the angle of approach is really important here. In your experience, do farmers tend to have a bias for procuring services or products? And what's the implication of that bias when looking at investing in technology solutions, whether it be software, hardware, intelligence, biological products that they put into the ground, whatever it might be?
One of the most misunderstood thing in agtech is that farmers don't have an anti-technology belief system. They have a belief system built around survival. And I'm going back to your statement that in their lifetime, they only have 40 paychecks. So farmers are incredibly rational buyers because the reason they live in a world where biology, weather, market, they can go against them anytime. So every time they have to do everything right to raise a crop every cropping season. So historically, agtech tried to sell product or tool or platform or dashboard, but farmers don't wake up wanting more products. So one thing we have to realize that in their life, they don't wake up wanting more product. They wake up wanting fewer decisions, just minimizing risk, and they want more confidence. So it is true that agriculture is a very unique vertical where farmers have willingness to pay for the product, but they don't have willingness to pay for any service historically, right? So in ag retail, when we do soil sampling, we don't charge any money, right? So in that case, what we do that, doing soil sampling will help us understand their soil better, know their soil, and that will help us to create more stickiness with the growers so we know what kind of product recommendation they need. We also have to look at a very simple reason why I'm going back to the statement like 40 paycheck in a lifetime, because they have one crop in every crop cycle. So every decision carries the weight of a season. That make them highly cautious, not because they're stubborn, but because the downside is very real, right? And talking about adoption, if you look at adoption and adoption of this new technology, I would say that if you look at USDA data and other federal reporting, the adoption story is very complex. It's not as straightforward as we think. So if you look at, some of the minority farms report using precision ag practice overall. So if you look at USDA data indicates that about 27% of the US farms and ranches used precision agriculture. So, still, when we're talking about adoption of precision technology, it's only 27%, right? So, going back to your question again, in farming, definitely there's appetite for service. But when we're talking about product need to have clear ROI, and that product should solve some problem and bring efficiency to farm.
I mean, I think that introduces a pretty interesting tension to think about, is particularly at the ag retail level, and how you sit in front of the farmer and sell product. If the farmer has this bias's default setting to look for products, not the services.
Yeah, the reality is farmers adopt when it is easy to use and
Okay.
it fits the workflow and having very clear return on investment. That's exactly why service win. So service is winning because you have, it is fitting under their workflow, easy to use, and services simplify operation. So when you have new products often add a lot of moving pieces. So if you're changing any product, it often add a lot of complexities. Now, here's the part that is changing fast if you're following that trend. For years, retailers help absorb a lot of cost of technology, as I talk about soil sampling. So historically, ag retailers absorb a lot of those costs, bundling it into program, rebate, free ads on, and
Mhm.
using it as a loyalty tool to keep those acres and bring that stickiness and build that trusted relationship. That worked when retailer economics was working fine. But now, in this market environment and how the external market forces are changing, the retail economics is very tight. We have seen some signal that margin has been pressurized by the input from all the way from input manufacturer to all the downstream player. So, like software input price and inventory moving through the channel at a higher cost. So, these all things are impacting ag retailers. So, if you look at margin for ag retailers, it is historically low. So, we have to understand that when ag retailers are struggling, this is the time when farm profitability is also under pressure from lower price, elevated expenses. If you look at recently, the input cost has went up anywhere between 18% to 80%. So for the farmers to have willingness to pay for anything that is not clearly tied to value is very difficult. So the bottom line is the both side is struggling with the margin, and farmers can't pay for any complex product, and retailer cannot absorb all those costs indefinitely. That's why service are the winning model. Service is attached to the outcome. And if the service is designed around their workflow, that will create the shared value in the value chain and everyone will get benefited. So that's why I highlighted that when we're talking about Agtech, do not bring a new product and make my life very complex.
Right.
Bring something that can simplify it. So I always used to say that adoption is a function of ease and use. So ease of use and having unique functionalities which can create value.
Poorly executed mergers and acquisitions destroy more value than they create. They can set your company back years. To defend your firm's position in the marketplace, you need access to the leading practices that unlock the greater potential of your people, processes, and systems. If you are undertaking a company transformation or pursuing an acquisition as a vehicle to grow, set up a call with Joe by visiting www.moshercg.com.
Let's go back to that example you gave around a retailer or a co-op that has historically provided soil sampling, soil testing, soil data analysis services for free as a way of understanding that customer better, compiling longitudinal data on their farm's production, their planting decisions, the yield by acre, yield by plot, et cetera. And they've done that as almost the funnel to then move product through the chain. And the product is where they were capturing some margin because they weren't directly charging for the service. Of course, that service, as you said, was bundled to a degree.
That's right, yeah.
As you look at an environment now where you have what Shane Thomas refers to as the four forces affecting retail, and a couple of them being, you're going to have the patent cliff, whereby a bunch of new generics will come into the market and is going to change the margin structure and the product types that farmers may be selecting. You're having much more generic manufacturing offshore in India and China, which is changing the nature of the marketplace, as the underlying economics of the products that the retailers has historically tried to move as a way to generate the margin to subsidize the service, that's going to be a big challenge for these retailers to sort of wean their customers off of that model whereby they've not been directly paying for the services they've been getting. Sort of thoughts around how do you manage that transition?
So first, I like to highlight those facts, as you said, about off-patent product. This is the real problem. Historically, if you look at the margin that these big companies has made, it was significant. Syngenta to Corteva to Bayer, all those R&D company, their return on investment on R&D was very high. And if you look at now, few industry reports found that out of top 20 global pesticide, only 2 remain on patent. So almost, I would say, 80 to 90% products. So roughly 90% of the most widely used pesticide, AI, active ingredient, are off patent. So this pressure is quite real. But at the same time, you have to understand the broader research also forecast, as more extensive patent are expiring, there's a kind of prediction. And if you look at the patent life cycle, with over 120 active ingredient expected to lose patent between now until next 5 years. So within 5 years, there will be over 120 AI that will go off patent. So as a result, what will happen? It will also create an alternate market. So it will create $20 billion worth of generic market, right? And in that generic market, the role that ag retailer can play, once it's off patent, they can private level, they can white level those agrochemicals. And definitely those generic products, they don't have the same level of margin that those highly specific, highly specialized product has when it was on patent. So I see opportunity for ag retailer when they get engaged in this off-patent product production or agrochemical manufacturing and things like that. That will definitely bring alternate revenue stream to ag retailer. Again, I'm not saying that's the job of ag retailer, but definitely it will bring new revenue stream to ag retailer. And then what will happen? Somehow the dynamics will change, and all those free service that we used to get. Now farmers has to pay for those free service that historically they never paid. So as margin is tight on both sides, this will redefine the importance of efficiency in the marketplace. So from input efficiency to enhanced efficiency fertilizer to the idea of precision spraying. So I think in the Agtech space, this will also bring new model. And when I talk about new model, I mean something like adoption of precision spraying, adoption of new technology like green eye technology, or adoption of something like see and spray type of technology, where that there's a very clear return on investment. So, my belief system is market is changing, all the external forces are changing, and there will be restructuring in the role that each organizations are playing in this space.
What's your, you shared that statistic earlier, Aman, around, I think you said 27% of all U.S. farms and ranches use some sort of precision spraying technology as of the last survey. Precision ag and precision spraying it's not a monolith, right? There's a wide variety of the different models of equipment that are in the field now, the models of equipment that are being released and available. And over time, it's been well documented. We expect there to be a shift from the value will be less on the efficacy of a product, and it'll shift towards the efficiency of the delivery solution. When you get down to spraying to a leaf level, as opposed to an acre or a plot or a plant level, right? So, but like I said, they're not all there now. Not all the machines that are out there now are at the leaf level, and they're not on all the farms. When would you expect this historic spread between the values on efficacy of the product versus the values on the efficiency of the application to sort of break and go the opposite direction, whereby the product becomes less valuable than the actual application service?
It is already happening. If you look at all the sign and the signal in the marketplace, this is already happening. So for example, the see and spray technology to green eye technology. As I said, herbicide resistance is a major problem, right? Herbicide resistance and how we can fix that. And if you look at, we don't have a real new mode of action. Some claim that they have new mode of action, but the reality is in the last 35 years, we don't have any new mode of action on record that is truly a new mode of action, right? So what is happening in that space is somehow, and as this new vision technology is improving, the edge computing to AI to knowledge guided machine learning systems are improving. So variable rate in terms of precision spraying, these will change the whole dynamics in the marketplace. So in last 5-10 years, what has happened that we had hundred of point solutions, and my prediction is the next decade will reward system that actually work together. It can reduce friction and fits how agriculture is practiced on day-to-day basis. So if I'm talking about green eye technology, basically green eyes is something like, it's not selling software for the software's sake. It is an automation embedded directly into execution. So the ROI is very clear that you will have input reduction, you will get operational efficiency, and immediate economic return. So farmers don't have to interpret it, and a retailer don't have to explain it. So it is so intuitive. So going back to your question that how this model is changing, so what will happen? Traditionally, if you look at ag retailers, it was a volume-based business. So ag retailers had margin in tank. That's how the whole revenue model was. Now, what I'm thinking, when the adoption of precision spraying will go up, what will happen? The market will slowly move towards outcome-based practice, where basically, as an ag retailer, you promise that, okay, here we have 160 acres. We will promise you a weed-free field, and here's the price point for that. So I believe this is already happening, and somehow we will move from that volume-based business into outcome-based practice. And I don't think it is going to be easy, but from my observation, it looks like the market is moving more towards outcome-based practice, and slowly it will happen.
Yeah, which is, if you think back 10 years ago, I mean, that value proposition seems almost unthinkable, that any purveyor of a product or service would ever adopt that kind of outcome risk as part of the transaction. But it's a pretty radical shift, and I think it's needed. I mean, I think that's going to put a lot of rigor and kind of on that. And maybe what you just shared is the answer to my next question. But if we look, so we've been spending some time looking over the last 10 years. If we look to the next 10, and we've got this cocktail of a market that requires a non-negotiable ROI, as you said earlier. It requires demonstrable value in the outcomes, alongside companies, whether they're startups or incumbents or VC funds, really focus on capital efficiency in the development of solutions, because we flush the extra capital out of the system. The ZERP era is going to be far in the distant memory. As those conditions kind of settle in, what is the most promising segment of sort of the ag tech sector writ large over the next 10 years? I mean, is it in this precision in spraying application and outcome-based services? Does it lie somewhere else, or where would you put your capital today?
I'll definitely have more automation and robotics, because the pattern you will see more of is automation and robotics that move decision making closer to the point of action. So vision based spraying, autonomous operation, precision application. So these are not like futuristic realities anymore. So if you look at adoption of precision spraying, it's very high. And they are the practical next layer once you have those digital infrastructure in place. So as I already mentioned, that we already cross that first phase. And so the first phase was like installation phase. So now you have all those digital infrastructure in place. So the next layer would be autonomy, autonomous operation, precision application in terms of spraying, vision-based spraying. And the other change that you will notice that retailers is going to play a critical role here. And I think this is often underestimated, that ag retailer, if you look at all those leading like top 5 ag retailers are quietly fixing their house. They are, gaining efficiency, operational efficiency, rationalizing their new tech stack, and being much more disciplined about what they wanted to do use with their farmers. So they're very well informed now, and they have learned that more tools don't create more value. So you will see kind of unification of tools at the ag retailer level. And also, we have also learned hard lesson from the first generation of farm management information system. So platform like each company has their own platform. And we learned that when system over aggregate data without fully integrating execution, economics, and overall agronomy, the result is operational bleeding. So what will happen? There are many examples within ag industry where they lost a lot of money and they don't have a functional farm management information system yet, in spite of spending a lot of money, high cost, high complexities. And ultimately, when you build a highly complex system, as I said, you will have limited trust on the system.
I think about a lot of these technology innovations that are going to be, they're not incremental, but they're additive to legacy equipment and modes within the value chain. So thinking about see and spray technologies or green eye technologies are typically a retrofit or a new product innovation within with something that looks more traditionally like a tractor, right? So there's still that underlying machine. Now that machine will become autonomous over time, like you said. They'll have robotic enablement that allows it to make a decision closer to the point of action. In terms of distribution, there's this entire distribution system that has been built up through dealerships. And there's been some folks with radical new technologies that have chose to not go through the dealership channel. I think it was Monarch was one of the examples.
Monarch tractor, yeah.
I shouldn't speak of them in the past tense, but that's an example that didn't go through a legacy dealer distribution channel. Do you foresee a lot of these product innovations naturally being acquisition integration targets of the legacy hardware companies that then use their existing channels to get in front of those farmers? Or do you think there's an opportunity to disintermediate that and create a direct to customer, direct to consumer type channel for these sort of innovative, game changing solutions?
I can see I can say it with all confidence that ag retailer is extremely instrumental in this whole process. So ag retailer or OEM, I see some sign that when you have very clear ROI, you know the value, you can directly go to farmers. And especially if you look at, I gave example about green eye technology. So green eye technology is a precision spraying system that you can retrofit on any sprayer. That's the advantage. Now, the other advantage you have there is there's no acre fee. Like when you look at John Deere CN spray system, it has acre fee that you have to pay to use that, overall system, right? CN spray system. So what is happening now is there are some, autonomous or equipment company, and their belief system is if we have a very clear ROI and we know the value and we understand the value proposition, and if we can easily translate that value proposition to farmers, they're going directly. But as far as scaling up business and amplifying, I think the OEM route and also going through ag retailer is extremely instrumental. You cannot ignore that because ag retailer are right at the front, at the farm gate, and they interact. So their level of interaction at the farm gate or OEM through dealer network or through their channel network is very important because you have to service those equipment. But it doesn't mean that new technology they can go direct to farmers because they have strong belief system. They know the value. So I don't think that it is always necessary to go through these OEM. But at the same time, you're right. I mean, eventually, when they're at a point that it sends signal to OEM that, okay, we have a lot of revenue stream here and we can amplify and we can increase our market share by this acquisition, that can be done. And it will happen. It has happened in the past and it will happen again. But it doesn't mean that this new technology will wait for this OEM or ag retailer to scale up. They will scale up as far as they can scale up. And who knows the future? The whole market, the market model will change. And maybe they're strong enough that we will have $1 billion company, a new unicorn in the OEM space or in the ag retail space. We don't know.
Yep.
And everything will be defined by how market behaves, right? So I would say both the channels are open. Ag retailers, OEMs are important. And at the same time, new technology provider, if they have confidence and they can create value, they can go direct to farmers and they can scale up as far as they can.
Yeah. I mean, this is an unoriginal thought here. I think one of the biggest challenges to solve for, because I'm no fan of defaulting to incumbency and saying this is the channel that's always worked. This is the channel you need to use to get to market. The installation of a new technology and a retrofit on your existing equipment is great, right? Because it really opens up the market and
Yeah,
makes it
definitely.
available in a capital efficient manner for the producer out there of varying sizes. On the service side, until you've got credible, reliable service, because again, come back to this critical period. You get one time a year to plant, you get a couple times a year to spray, you get the one time a year to harvest. That's where I think sometimes there's going to be a challenge to sort of decouple from a legacy distribution channel when it comes to in the field technology, simply because the suspicion or the fear around lack of service. Because as we know, I mean, the farm gate is highly fragmented and it arguably needs to be. We don't want to have just a handful of farms in the country, but that's always going to be a distribution and service challenge.
I agree. Yeah.
As we come up on the end of our time here, though, I do want to ask almost the obligatory question around
Yeah.
AI. We've talked on the pod in the past around some of the biological constraints in ag, and some of the biological constraints have in the past extended iteration cycles, just because compared to other industries, things have to germinate, things have to grow, things you have to see how something evolves and performs over an extended period of time. And so this has created some barriers to iteration, to quick iteration, I would say. Now, AI, the feedback loops are so much faster, right? The
That's right.
ability
Yeah.
to predict and to model multiple different outcomes and modes. We don't have to talk about biological products, but as you think about AI in the context of ag tech and the ability to iterate to get to the non-negotiable ROI and to get to the demonstrated credible value, what are the most interesting use cases that you're keeping an eye on, Aman?
In agriculture, there's a shortage of real talent. So if you look at, we need more agronomists, and AI biggest impact in agriculture is not like replacing agronomists. My thought is AI will empower those agronomists. So what will happen is now you will have faster learning process, a lower risk in terms of now you can analyze whole data set like historical, retroactively go back, look at climate, weather data. And also what will happen that in agriculture, if you look at the R&D timeline to create a new variety, it was like anywhere between 5, 7, 8 years. And now what will happen that, this multiple virtual cycle we can create through AI and knowledge-guided machine learning system. So basically what will happen, it will reduce the amount of money needed to launch a new product. So basically, AI is not going to eliminate biology, but it will finally let us learn at the speed biology is going to work. So what will happen is this whole retail skill level education will become so fast. And the ultimate output, I'd say that AI will turn agriculture from reactive to anticipatory. So what will happen is now when we see, let's say, insect infestation or fungal infection, right? And now you can have more like, in spite of having prescriptive, you will have more predictive model based on all your historical data. And the ultimate outcome is that the AI will turn agriculture from reactive to anticipatory. So you anticipate that this is going to happen, and your window of opportunity to act on that problem is wider. So you can plan, you can execute, and you can work on those insights. So earlier in agriculture, the challenge was like, by the time we get the insights, we don't have window of opportunity to work on that and to fix that problem, which is changing now. As you rightly said, that basically the AI biggest impact is the time horizon, the sense of time, the sense of urgency. Now those are kind of widened. So it will give you opportunity to act on those insights, which was not possible earlier. And at the same time, it will also empower our agronomists and their learning process, faster learning process, faster prescriptive process, faster all those predictions, right? So that's where I see AI will have biggest impact in agriculture. And then the reason is, as I said, agriculture is the most complex biological enterprise on this planet. So if you have something that can simplify, it has great role to play. And that's the reason I'm very excited about AI in agriculture and knowledge guided machine learning system, which can analyze a lot of remote sensing based data. It can analyze like more predictive model. And overall, I would say my closing thoughts is Agtech is not broken, it's growing up, and the hype phase is over and the value phase has begun.
Well, I think, you sort of front run me there. I was going to say, we almost can bookend this discussion with those closing comments around optimism that we started the discussion with. So despite the headline news that gives us a lot of pause, and it's cautionary tale, and Agtech writ large has failed to deliver on the investment, the dollars invested. This is a different perspective, and I think an important one for us to consider, and that these things go through stages and evolutions. And so really appreciated your time and perspective today, Aman. I don't take for granted the fact that you took time from your day to share your perspectives. And so just want to say thank you for taking the time to join us.
Thank you so much. Thanks for having me.
And to our listeners, I appreciate you being part of the Pacesetter Pod community and taking the time to listen, consider, and action some of the ways that you need to be thinking about to improve strategy execution and supporting the growth of your agribusiness. Thank you for your support, and I look forward to having you join us next time right here on the Pacesetter Pod.
This is thepodcastfactory.com.